Okay, so Berkeley Blockchain Xcelerator, we've been around for a while. We just finished selecting the fourth cohort, but it's good to connect with alumni. So, Oliver, it's been a long time. Tell us who you are and how you grew up. We can talk about your startup, and I'm sure we'll do that a whole bunch later, but just tell us who you are and how you grew up. What happened to you before you became the CEO?
Sure. Oliver Yates. I'm half French, half American. Born and raised in Paris, France. My father is from Los Angeles, but he moved into France when he met my mother. Um, so I was raised, as any Parisian child would be raised, I guess. But I'd go every year back to see my family in the United States. I grew up loving science fiction books, uh, Star Wars movies, playing video games, and playing music as well. So I'd say also quite standard on that aspect. Um, Always really enjoyed math and science and all that kind of stuff at school. I was also a really big slacker, so I was never the best at school at all. But I guess the harder it got, the more interesting it became for me. And so I really initially thought I'd be an aerospace engineer, to be honest. Like most of my life, I was always very passionate about more the space aspect than the airplane aspect. I really loved space shuttles and satellites and you know planets and all that kind of stuff. Just really rang a bell with me. My studies actually I studied aerospace engineering in France. But I really quickly understood that there's the myth around what space is, and that's really cool, and I'll always love that. And then there's the reality of both of working for a space agency or working for, in France you have like Dassault, or you'll have like I don't know Airbus, Líneas, like just the classics there. It's just not something I wanted to do. Um, so the next step for me is, well, what do I do now? I guess, computer science was what I was now interested in, and just working, doing research in computer science in general. Um, and I remember I had the choice between going and doing a research master's degrees in the UK for a theoretical computer science and doing an applied master's degree in tech entrepreneurship in France, jointly done with Berkeley. And I got admitted in the second one, and I didn't get into the research master's in computer science. And I was like, all right, I flipped a coin, and this is what I'm going to do then. That's fine with me, and never regretted that choice. Now I'm really happy about that. So that's what got me into the whole entrepreneurship part of things. Um, and the way crypto joined that was actually a bit earlier. So back in 2016, when I was still an aerospace engineering student, I worked for a big French insurance company called Euler Hermes, and I developed a very simple, smart contract insurance protocol with on Ethereum. Back in 2016, Ethereum wasn't that popular. I mean, the whole space wasn't that popular compared to what it is now, of course. Um, and then I realized that, okay, having done that, there aren't that many people in France who know how to do that. So let's capitalize and start building a niche. So I kept working for Research Lab in France on Ethereum network security. Ended up working in San Francisco after that for a company called Merkle Data, also in crypto, of course. We were selling trading and risk signals to crypto hedge funds. Um, so yeah, I guess crypto and blockchain were always part of that. And so you mix that with the fact that I started pursuing interest in entrepreneurship, and that gets us to where I am right now.
Gotcha. So I feel like a lot of people have this dream of being a Tony Stark or of going to space, of trying for the unknown. A lot of people have ambitions of going into heavy academia, maybe even for career reasons, not
Yeah.
just because they want to be academics. I think quite a lot of people have experience in big companies, but feel as though it doesn't quite align with their life purpose. But it looks like you've seen all these kinds of things from the inside. So help me understand what led to you developing the courage or maybe just getting so sick of the norm that you wanted to jump into an entrepreneurship lifestyle.
To be honest, like I'm quite adaptable. So if there's a setting that works for me, I'll always be like 300% on it. So like I could, who knows where I would be right now if I had decided to go like join a big corporate. Maybe I'd be super happy right now working for some big, I don't know, Amazon or something. I have no idea, to be honest. What's for sure is that what drives me on the day to day is the interactions I have with the people in my company. And like that was a common denominator in the, especially Merkle data, like the experiences I had before. The best part of my day was having interactions and learning from the other people I was working with. Like I know this sounds really basic, but it was like all the simple stuff, the jokes, having lunch, learning a bit more about their lives, like all the non-technical aspects I really liked. And so I guess that since I did that applied masters in entrepreneurship because some people in the year above me said, "Oh, well, this is a great way to go to the United States and get a scholarship from the school. So you're able to go there without paying for 30,000 euros, and you get all that exposure. And so whatever you end up doing, at least you went to those great schools, and so you'll be able to land on your feet." So initially it was just super pragmatic, like it was a pragmatic choice. But as I was exposed to really brilliant people once I followed that master's, um, I'm super, I'm influenceable in a sense. It's easy to influence me with all that good stuff, and so I just got carried on that entrepreneurship vibe. But it wasn't as if I did it because I was sick of another system or because that's the only thing I could do. It's because you know you kind of become like the people you hang out with and grow up with, and the people that you have around you right now partly define who you are. And it was what happened. Like I spent years with the people that were focused on tech startups, and so obviously that defined my work values, my work ethics, my work interests.
Okay. So tell me, when you started your company, how did it happen? Because some of the most common stories I hear are I had an idea, but really wasn't serious. And then a
Mhm.
VC met me and was like, hey, here's money. So I thought, why not? Another kind of story I hear is me and my friends were hanging out. We had a whiteboard. We maybe were roommates. And all of a sudden we thought, hey, we're a good team. Why not do something? So that's another story I hear. Another one is I have a vision and it's the only thing I could do. And it's the only thing I love. And I just have to live this way, which probably I'm not sure if I'm built that way. Right? I'm not sure if I have just one singular mission in the world. But I wonder for you, how did it all come out?
Yeah, I guess this evolves with your age and with your number of experiences. Are you a first time founder, second time founder? So I'm sure the answer won't be the same depending on which part of my life I'm at. For
Mm,
SheeldMarket, I was in case number two, the team. So I have three co-founders, Simon, Arnaud, and Jacques. Simon and Arnaud I've known for a few years now because we studied in the same schools, the different schools. So we kind of like followed each other's footsteps throughout that. And we each worked in crypto at our side. And when we got towards the end of our studies and we were going to go to Berkeley, I remember, so Arnaud, he was the first one that started working with me. He's our CTO. Um, he was helping me move, and we weren't like close friends or anything. Just we went to the same school before. We moved into the same masters in a new school, so we were like, hey, like, can you help me move my stuff and let's hang out and chat. And I knew he had worked for a crypto mining firm in Paris, and so I remember we were sitting in the truck at the end of the day, kind of like tired, and I was like, how is your summer internship, man? He was like, dude, it was totally crazy. 2018 crypto went up and then just crashed. I was like, same for me. We're going into like our final years of entrepreneurship. We're supposed to build a company. Let's just team up and like build a crypto company. He was like, all right, yeah, that works for me. And so we started looking for a bunch of random ideas. We had a really crazy ideas. Like I remember we at some point we were looking to build a sentiment analysis tool for traders that would analyze BitMEX IRC chats to know in advance when liquidations would happen. Just and so we had to focus everything on detecting how do you call that? Not slang, but like bad words, I guess. I don't know. I don't fluently speak English anymore.
yeah, yeah,
So it
totally.
was like a different type of AI, I guess. Like all the F words and stuff. So, anyways,
Yeah, it's a fun idea.
it was fun. We had a bunch of really weird, like blockchain explorers, just stuff. It was 2018, different space back then. Not as much funding as right now. The big players of right now either didn't exist or were having trouble. And I remember in January 2019, we get to UC Berkeley. After a week and a half, our ideas get pounded to the ground. So we're like, all right, you have to start from zero, but we want to work in crypto. And then Simon joined us, who's our COO now. He was at that point working on another company with a friend of ours who ended up not working with us. But and it was really just us four around a whiteboard, like, what can we do? Like crypto, make money. We're in the United States for 5 months. What should we do? And so that's where we got to the idea that was the initial SheeldMarket. So the company was around building a dark pool. And that's, you remember when you met us, Luke, that was what we were working on. So the idea was, how can you build a crypto exchange system that allows participants to trade very large amounts of crypto without moving the markets? So that was the initial concept. Um, but yeah, we just pushed it, right? It wasn't as if I was born with that idea. It was as if I had past experience in trading. It's really because someday we were, as every day, working in the library in Berkeley, and everybody was kind of like just looking around online, learning about crypto, trying to find ideas. And I remember Arnaud was learning a lot about zero knowledge proofs and that kind of tech on webinars and like YouTube videos. And I remember he fell on this research paper about encrypted auctions. We're like, what the hell is that? And it's, he can perform auctions without anybody knowing what's going on. Even the auctioneer doesn't know what's going on inside. And so he was like, hey, can't we just do that around trading crypto? And I was like, I guess. And so we just started, it was like really just that random. We just started exploring that. That was the beginning, really.
Okay, understood. So then, in front of a whiteboard, you're with your friends. How did you all choose the name Shield?
Um, Initially, the company wasn't called Shield. So the company was called Axiom. And we call it Axiom because it starts with an A. And it's always good to have a company that starts with an A because you're on top of the list for everything. And it's quite easy to pronounce in many languages. And also because we were doing math stuff, so like an axiom, it just makes sense. Um, we quickly abandoned that name when we realized that we couldn't like get the actual IP on the name or anything. It was just already used too much. And so then the next thing, I remember we were just thinking about all types of words that would be characteristic of what we do. It was very like straightforward, to be honest. And since our system shielded proprietary trading information from the outside world, we're like, hey, it's a shield. And like any good startup in 2019, just replace whatever with two vowels and that works. So that's how we got to shield.
Gotcha. So as you look towards affecting the crypto industry and working with big players, did you have any moral concerns that came up? Any moral discussions or dilemmas within the team?
You mean with regards to our like SheeldMarket, like dark pool, or just in general?
In general, but definitely regarding the startup and what you're actually doing in the industry and to the industry.
Yeah, yeah, yeah. So I can't go into the specifics, but so what we do today is that we're just a middleman. We have an access layer for any business that wants to do crypto, whether it's a fund, whether it's a fintech, a bank. They can do crypto for their own purposes or offer it to their customers. So we're a middle layer, which means that when you're a middle person, you can tamper with a lot of stuff, the data, the like trading, for example, right? Who guarantees you that you're actually trading on the exchanges as we say the customers are? Maybe we could be taking a bit of money each time and like not giving them exactly the best price. How would they ever go check? There is no standard in the industry, that kind of stuff. I mean, there's a bunch of ways we could cheat and make additional money on our customers' behalf. Of course, there is a risk for them. There's a cost. There's a cost that comes from somewhere, right? They get a worse price than what they would have gotten. There is more risk for them, whatever. We could do that. And I know firms that do that. I mean, it's not as if there was a choice. Like, it was just very natural for us to decide not to do it and be very clear that it's not part of who we are. We're responsible. It's one of our core values. It's easy not to be responsible in crypto. And these types of situations have happened several times where we could have taken advantage of our customers. Even like, it doesn't have to be super hardcore, like in ways that are easy to justify to yourself and make you sleep at night. Like, there are ways we could have done it. It's just not one of our values, so we're very strict about that.
Yeah, I like that. I mean, I was having a discussion with some industry friends recently, and we sort of agreed that going forward in crypto, one of the highest valued things would be someone's reputation. And there will come ways to verify reputation, not only by word of mouth, but by actual behavior tied to your identity, to your wallet,
Mm,
etc. And so in the future, I mean, if you had a choice between someone well trained or highly experienced and someone with a good reputation,
yeah.
actually the reputation might win out. And if you have more and more people of reputation in a certain organization, then that project would be very likely to enjoy lots of support and even investment.
Yeah, end of the day, it's kind of the same thing when, and a smaller degree, when you're a VC and you're looking to vet a founder for like a pre-seed or a seed deal or even Series A, you're betting on the person, right? So, I mean, it's just a generalization of it. It makes sense.
Yeah, it's true. So, okay, Shield, from dark pool to 2022. Tell us about the journey.
Um, yeah. So you met us in 2019, end of 2019. We joined the winter cohort of the Berkeley Blockchain Accelerator. We hadn't raised any money yet. We had our dark pool concept. At that moment, three founders, Simon, Ano, and myself, the girl that was working with us in the master's degree, had stopped at the end of the master's degree to go and pursue a real career with a real job.
Sure.
But we're good friends today, like it's totally fine. And so we had this dark pool concept. Kind of around the same time, we just met with our fourth co-founder called Jack, who wasn't our co-founder at the time. He's the person who created one of the largest equities dark pools in the world at Credit Suisse called Crossfinder. He has a wealth of experience in trading. He's pretty known in that specific industry, worked in hedge funds, So he'd exited the company he was part of before. He was on, garden leave. And initially he joined us as an advisor. I remember I met him for coffee. He I met him because the person I interned with, Jacques, was his former boss in banking like years ago. So he was like, "Oh, you should meet Jacques. He's great. He knows dark pool stuff." Um, so we had a few coffees with Jacques. He agreed to be an advisor. And as time went on, as the weeks went on, instead of just calling us once a month, he'd be calling once a week, and then he'd be calling once a day, and then he'd be coming to the office once a day. So we were like, well, the office, we were working out of the library, obviously. And we were like, you know what, Jacques, let's just split the equity four ways and you join us full time because it definitely seems like you're having more fun with us than you are, doing your garden leave in Hawaii or whatever. So he joined. That was like around the same time we were in the Berkeley Accelerator. We did the demo day in December 2019, and in January, one of the funds that saw us at the demo day, so Draper Dragon, they had kept in touch with us, and we kept talking, and so they were definitely they seemed interested in investing in our seed round. At the same time, we had another fund in France with the same kinds of conversations, and so we ended up having building a deal where they were both co-leads, which I think is pretty healthy when you're at a seed round. If you like spread the capital with a few participants, there is less. Concentration can be dangerous when on a cap table for a bunch of reasons. It could be because if that fund loses interest for you and decides not to put money in further rounds, that sends a negative signal to other potential investors. It's because they have the ability to influence the board a bit more. It's just a bunch of reasons why this is healthy. So we did that, um, and right after the seed round, we pivoted because we'd been having conversations with prospects and like everybody was super interested in trading in encrypted crypto dark pool, right? Just the words themselves are weird, um, but no one was willing to be the first user. And as for any good marketplace, the chicken and the egg issue is very strong. And instead, they were all interested in the little gimmick we had on the side of the screen that allowed, we said, oh, if your trade is not matched in the dark pool, we'll route it to another venue like Binance and execute it for you. So you'll get executed. And they were all asking, oh, wait, that means I can trade on three exchanges at once? Like, this is awesome. And we're like, oh, so that's what's interesting you, not the super cool encrypted like science fiction stuff, just that. Okay, that was just a gimmick. So we started building it out. Got our first customer, lost our first customer because our product was not at all what they were looking for. So that was a really good learning experience for us to understand what they needed, how to market it. Um, we reached the end of the year, and we'd also started working in parallel on getting our French crypto license because the process had just opened, and so reach get to October 2020, and we get our French crypto license. We're the fourth company in France to get our licenses, which is awesome. We had the money to work with lawyers from the seed round back in February or March, so that was great. The licenses are for custody and trading or brokerage, exactly what we're doing. And we're the only, and up to this day, we are still the only French licensed company that is targeted towards institutional players and banks and has all that institutional infrastructure. And so we get the license, and then we at the same time we close another customer. So it's like, hey, well, might be a big customer. We don't really know them that much. We'll see. They said they do just a bit of volumes, and we close a few other funds, and we say, all right, we're going to start operations in January after New Year's. And so we start operations in January, and we thought it would be very slow. They try, a few trades, a few $1,000s here and there, see how it works, and we'd have time to adapt. But instead, the customers, they just started dumping whole clips on us, like 10, 20, 30 millions at a time. It was huge. Um, so for a few months, the different founders, we we were working on how do you call that in English? Uh,
What is it in French?
it's trois huit. So it's when when you work in like like when you're how do you call that? Like in the 20s, you'd work like there'd be a slot from from um from 8 p.m. to midnight. Then no, sorry. So you 8 p.m. to midnight, midnight to 4, 4 to 8 a.m. or whatever. Like you spread the time like this. And that's for like hardcore schedules. We did that with the four founders for a month and a half because part of our back office, I mean, some stuff hadn't been automated yet. Like you had to deposit and withdraw millions of dollars from Asian exchanges with a back office that almost did not speak English. That's the kind of stuff where you need human intervention. You can't just API the hell out of it. So, yeah, a lot of manual work, just getting some issues with the trading stuff. So that was hard, but it's also awesome because we were making money and it was the first time people were using us and it went really well. So and that was at the same time as the crypto bull run. So after a few months, we started thinking, hey, who knows how long this will last? Let's raise money. Like, let's get some money now because, as for any good crypto cycle, if you have money now, you can last through the next winter.
Very smart.
So we started thinking about Series A. Seed, I was totally new to it. So the seed thing, I mean, I remember getting exploited so many times by VCs who just wanted to learn and never wanted to invest in us in the first place. And I was so naive and so nice with everyone and get to Series A, I now feel like I'm a war veteran. Like I'm much meaner and much more strict with who I'm speaking to, and just because I've lived it. And I remember people that had like kind of spat on us in the seed round coming back because now it's crypto bull run, and it felt so good to I mean, not waste their time, but just make them understand that well, there was a choice to be made a year ago, and you decided not to be nice with us. So of course you won't be a priority on the people we speak with. Um, yeah, in reality, you don't really have the time to think about such petty things when you're fundraising. But I remember just thinking at one evening, like, oh, that feels good. Um, and so I was helped a lot by our seed investors and business angels who explained to me how things should be done, which was great, like the methodology for the Series A, who did a lot of the intros. So that was awesome because that was super fast. Meaning that from the moment we decided to launch the Series A process and the moment we got and signed a term sheet, it took a month and a half, which is not the fastest round ever, but I believe is very, very good and did not drive me crazy. Like it didn't last 6 months like other companies I know. So raise our Series A with Atomico as a lead, and they're awesome, an awesome fun. Like I do not regret a single instant having chosen them. They're really good. Um, so that was middle of last year. Acquired a few customers since then, and so we when we raised the Series A, the company was about this whole execution thing, right? Executing on exchanges for customers, pretty straightforward. But our vision goes beyond that, and it has for a bit over a year now. 8 years from now, will the purpose of SheeldMarket really be I want to buy Bitcoin at a better price with dollars? Not really. Um, we believe that in 8 to 10 years, financial infrastructure will run on a common operating system. Currently called DeFi, who knows what it's going to be in 10 years? Um, it's definitely going to be difficult to plug into it. And people will want to plug into it because banks will still exist. Banks have a role. They have capital. That's not going to disappear. It's a concept. But instead of using their own crappy technology, they'll just inject their capital into that DeFi infrastructure and extract services they can distribute to people. Same thing for everyone. So that'll be the common OS. And we want to be the interface between that common OS and all these businesses through banks, through brokers, directly to some SMEs, whatever. We just know that's the place we're going to be in that ecosystem. And so Of course, buying and selling Bitcoin and other cryptocurrencies is very far from that. So we're starting to move toward that direction now. We're working with more and more fintechs, neobanks, wealth techs, etc., that want to distribute smart financial products to their customers, where the backbone is crypto, savings product that leverages yield, index products, good old brokerage, whatever, like payments. And since we're plugged in everywhere and we had all that base infrastructure that's really meant for wholesale transactions, we're really suited for these use cases. And we've built an entire layer of infrastructure that makes it very simple for these companies to distribute these products to a million customers at once, because that's always the issue. Like, they don't want to go and get licenses, they don't want to build a whole middleware layer to distribute brokerage to a million customers. We do that for them. They don't have to get licenses, they don't have to do all that stuff. So that's the next step, and I feel like we're moving closer towards that vision. So that's SheeldMarket in 2022, enabling the enablers in a sense.
Okay, gotcha. So let's kind of backtrack. You mentioned some stuff about regulations. You're the fourth
Yeah.
in France to get that kind of license. You mentioned some stuff about VCs, how in the seed round you were more naive than in Series A. And I totally feel you, man. Sometimes to get those small wins, those emotional wins,
It's
it
an emotional
matters
win.
because yeah, it signals that you're growing up. It signals that you're not who you used to be. And I don't think it's about vindication or vengeance or justice. It's totally just about respect that, oh, when I look in the mirror, I totally see a guy who won't get taken advantage of. I see a guy who's more focused than before.
Hmm.
So I think it's the signal that the ecosystem is providing you that you have earned your place and that you continue to earn it, that you're worthy and you
Yeah,
belong. That's what it means.
that makes
But
sense. Yeah,
that
that's a good way of
said,
putting it.
yeah, I want to backtrack and ask you two things. So, number one, what were some of the regulatory hurdles that you had to overcome? And also, what were some of the VC hurdles? Because those are two problems I continuously help my friends with, and it's like an infinite array of problems.
Yeah. Yeah. So two very different topics here. On the regulation side, um, there is no global regulation, so that's really going to depend on the jurisdiction you choose. Back when we started the company, there weren't that many jurisdictions for crypto. I mean, the US was and is still very much unclear and an expensive jurisdiction to launch a crypto company, especially when you're a middle. Like, just look at it for real. Any type of infrastructure player that's not a data provider or a tech provider, they're all the big players now because you need a lot of capital to get the licenses, one per state. Um, so you had like Switzerland, and you had these exploratory regimes in Malta or Cyprus, but didn't. We wanted to use a tier one regulatory regime, and we'd heard about France working on a new regime, and we knew it would be up and coming soon. So the arbitrage essentially between choosing the US for business or Switzerland because it was easy, or France because we knew there would be an actual regulatory framework, plus we're French, so very easy. The choice was made for us. Now, fast forward to today, the landscape has evolved. um, the US is still very obscure and complicated. You have France that has a full-on regime and super active. You have Germany that has a regime as well. I'd say it's a bit less developed than in France, and the regulators are a bit less proactive, but still, there's an actual framework in place. Um, Switzerland is great. I mean, they're super open. You have a lot of businesses going on there, but it's Switzerland. We really wanted to be, in a country where regulation is a bit more powerful. Like in Switzerland, regulation works a different way. It's self-regulation sometimes. So. And then you have Singapore, which is awesome, but just not necessarily where most of our customers are, or that region is not where most of our customers are. So our hurdles are mainly around European regulation. So that's what I can focus on. And I'd say that the main hurdles we have are, I mean, they regulators, they understand crypto now fairly well, but you have all these exotic products that have been happening for a year, right? I mean, derivatives, crypto derivatives. How does a perpetual swap work on Binance? Damn, is that a crypto? Is that just a derivative? Like, is it both? And so, um, hard stuff. Automatic market making, liquidity providing on AMMs. How does how do liquidity pools work for lending? Those are some interesting conversations with the regulators because, of course, and I understand they've been building so many rules around centralized players because centralized players have risk. And so they have this mental framework around people, and people are the risk. And it is still the case. Like a DeFi protocol, if someone coded some bad code, the risk is there. But so hurdles are about making them understand all these new protocols that go beyond explaining Bitcoin, because they get Bitcoin, but that's not the hot stuff anymore. Um, that's issue number one. Issue number two is, at least, I mean, you have regulation around the financial products, and then you have access to banking services, and that's all the AML stuff. And of course, that's always very complicated. I can't go into too much detail, obviously, but there are some very hard conversations with the regulators around kind of the interface between crypto and actual, fiat money. There's always some issues there. So yeah, it's not if you're a tech provider, it doesn't matter, but if you're a broker or a custodian or anything with a regulatory status, then it matters a lot.
Well, just to I guess just to help out our audience a little bit, because I'm sure there's people tackling similar issues that you did, without naming names or saying specific topics even, could you walk us through some conversations you've had with regulators that made you think twice, or that, it was kind of difficult to navigate? Some stuff that might enlighten others in your position.
So unfortunately, well, fortunately for me, I have a very brilliant co-founder called Simon who managed and has always managed he got his license in 6 months. We're today the fastest company to have gotten the license in France for crypto. So I actually don't have any like fun or weird stories to talk about that. He just shared some of it with me. So for example, um, I know that explaining like just something really weird about perpetual swaps. So perpetual swap, or just let's just say a futures contract on Binance to make it very simple. Um, it's the margin can be it's in coin, in stable coin, for example. So you have, I don't know, Binance USD, BUSD there, and then you have a futures contract on Ethereum. So normally, at least in Europe, derivatives, they're either physically settled or cash settled. So physically settled is when you've delivered the good itself, the commodity or whatever, stock. Cash settle is when you just settle the cash, that net value difference. Um, but here, it's not physically settled because they're not buying, the two traders on Binance are not delivering ETH to each other. Binance is the central counterpart, but it's not cash settled either because it's settled in something called BUSD. So what is it? What is this product? And this question is it's this, there's no simple answer, right? This answer takes months to build, and you work with them, you work with your lawyers. In the US, you have the CME, Chicago Mercantile Exchange, and you have cash settled futures on Bitcoin and Ethereum. So that's simple because it's settled in dollars. But people don't want access to that. It's not liquid. It's not interesting. People want to do, they want to go and trade derivatives on Binance and Huobi. But so that's the kind of conversations we're having, where since all these products have been built by players that are unregulated or at least in other jurisdictions, and so they build them in such a way that they wouldn't be requalified somewhere else. They're weird products and they're built in a non-standard way. So as a broker distributing these products, we have the hard job of having to explain which qualification we fall in since we're brokering these products.
Totally. Okay, so in short, find good lawyers, focus on single or maybe a few jurisdictions you really want to play
Start
with.
with one, and find good lawyers,
Okay.
and have someone in the team that's really good with details, that has the grit to go through with each, because this is not a fun process. Nothing to do with fundraising. Very different.
Hmm. Totally. Okay, so moving on for VCs.
VCs. Yeah.
So especially for a first-time founder or a founder who's coming into Web3 for the first time, how do they navigate the following questions of, from where do I source my VCs? What kind, what size? Um, how do I build relationships with the right people? All this kind of stuff.
Yeah. So I think the landscape has evolved a lot since our seed round in terms of expertise and which funds invest. Because when we did our seed round, no French funds had ever invested for real, in real crypto. There had been Ledger, but Ledger is a tech, infrastructure player. It's a bit different. Um, so I'll answer in several parts. The first thing is I believe there are still hurdles that today would still, you still have them with existing VCs. When you're a crypto company like ours, whether you're a pure Web3 protocol or a company, you're a centralized company, like ours, you still end up having this issue of there's crypto in my balance sheet, or my revenue is like 100% tied to if the market is bullish or bearish, right? It's not a SaaS business. And VCs love SaaS businesses, and what they really don't like is when it's non-recurring revenue. So having these conversations, at least back in my days, it always boiled down to whatever they were telling me, like, oh, but it's non-recurring. No, the real problem is you don't believe that crypto is actually a long-term product. If I was selling data with like a recurring revenue, even if you didn't believe in crypto, it would be fine because I have these metrics, I'm selling recurring revenue. But when your business model is tied to underlying markets, as a VC, you start thinking about, well, will these markets keep going up? Or, back in 2019, they just crashed. So it was like, will they ever go up again? So these were issues I had. And then you had to find VCs that actually would take a leap of faith around just the crypto ecosystem as a whole. That was like whatever our tech was, there was still that big question of, does the VC believe in the ecosystem as a whole? Now, in terms of expertise, the other issue is a lot of the VCs, they don't really understand what you're doing, because this is really different. And you do have like, I now know a lot of VCs that know about that stuff, which is great. But 2019 wasn't the case. 2021, when we raised our Series A, still wasn't the case, at least in Europe, or very few. You have like all the classic American crypto funds that are great, but they're in the US and they do have like international presence, but there's only so many of them. If you've been rejected by them, then what can you do? So convincing generalist funds is different. And what I'd say, if you're a first-time founder in crypto and you're looking to your first fundraise, because I expect that's who this is targeted towards, the best people to work with are definitely business angels or super specialist small crypto funds, um, because you don't necessarily need that much cash. And we're now at a stage where a lot of veteran, like OG crypto founders, have made a lot of cash and invested in the space, and they definitely get the thing. Like they get it, and they're okay with losing that money anyways. So I'd say, if you're lucky enough to still be a student, use your student email address and contact everyone just to say like, hey, I'd really like to have a coffee chat, understand what's going on, because I'm working on a project and I want to understand, how you got to where you are. It doesn't have to be investing conversation. Like, they'll, if they want to invest, they'll say it anyways. Don't ask for money, but it might, right? And I think I remember doing that at the time. It's still the best way. You have a student email address and you're a student, you're not a threat to them. You're like a nice little kid. So use that. If you don't have your student email address anymore, I mean, go to as many events as you can. Just go to the after parties and meet random people around drinks. And out of the 100 people you speak to, maybe one of them will be useful and make some useful introduction. But still, provide positive karma to everyone. But that positive karma comes back to you in a really good way through like maybe 1% in your network. But the best capital you have is the people you know. And there are so many. I mean, there's so much bullshit, if I may say, in crypto. Like filtering through, sifting through the right and the wrong project. It's hard, so you kind of have to go everywhere, and you'll learn how to tune your detector as you go. Um, but yeah, just reach out to existing big crypto company CEOs, because they definitely have a lot of money and they also invest as business angels, and they're the best people you can raise a pre-seed round with. They can allocate easily a few million on your pre-seed round, like no issues around that. And they raise funds with great VC firms, and so they'll just make the introductions for the next round, and it's all set from there. Um,
Yeah, I could not agree more. So now we know how to find good VCs, but let's talk about bad VCs. Again, we don't need to name names, we don't need to name specific topics, but I know you've seen some stuff. And so what are some of these interactions? What are some of these tactics? What are some of these things that happened to you or might have happened to you and your team that others can avoid and should watch out for?
Yeah, I don't know how much of it can be avoided unless you know the firms by reputation. So what I'd say is, if you can get references on the firms, and I'm not talking about official references, just look around their portfolio companies and think if you know anybody who works there who can get a quick, you have a friend working in that portfolio company, ask them, hey, that VC wants to chat with me. Could you ask your founder really quickly, like what they think of them? Um, you'll know really quick. Also, if in their portfolio companies, you only see companies that are known to have like a really bad company like work culture, this is also this is an indicative sign, in my opinion. But anyway, like, and I don't know how you can prevent it, but some stuff that happened to me. I remember, for example, one time I went to this. French fund I will not name, and they invited me to their offices, seed round, of course. I didn't know anything about it then, and they asked all these questions. So I was super eager to share everything about the vision, the tech. I gave them a master class around crypto, and back in that time, you didn't have a lot of people that were knowledgeable about the crypto space in France, especially in VC. Um, and I remember at the end of like the hour and a half of me giving them free value, I think it wasn't even a partner, like the associate or the principal said, "Oh, and by the way, I'm so sorry, but actually our LPs forbade us from from investing in crypto, so we can't legally put any money in you." It's like, but you knew we were doing crypto before I came and pitched, right? We had that call before. She's like, "Oh, I'm so sorry." Um, and back at the time, I was really polite. I didn't say anything. The current version of me would probably react another way. But that was like one example. I remember going to, this is going to be a lot of French funds. I believe that the American and English funds are much, even Nordics, they're much more open minded, but French funds, oh my God. I went to another fund that was deep tech focused. Um, and I remember there was the associate who got me the meeting and then the partner, old partner. Um, and I started pitching the company, and he started, it's always it's a red flag. Okay, so you know what? I'll talk about the red flag afterwards because that's actually something that you can use. But what happened is that really quickly, the partner started saying, "Oh, but at the end of the day, I mean, Bitcoin is just fake money. So you're not selling something that has any value. How do you know it has value? Like, why would people pay for it?" I was like, well, that's uncorrelated to our business, but that's another fundamental question, which is, do you believe crypto can go up? He was like, this is just it's he thinks it's a scam. And so I told him, well, I actually remember I told him, I think that there's, a few $1 billion of AUM that disagree with you, but that's your opinion. That's totally fine. But I spent an hour with him, and he was so impolite, so close-minded. And so, and I had a few other conversations that didn't go, weren't that extreme. Even after Series A, like some VCs came to us regretting not having invested in Series A. That's the classic. And then they take you to site for an hour at a cocktail party and like just it's a tunnel, right? They start speaking, and if they're the only ones speaking and they're trying to justify any decision they had, like I remember they justify like other investments or why they refuse other investments, and it's as if they felt really insecure and they have to prove themselves, and they're trying to show like how much they know about stuff, especially when they're not knowledgeable about crypto, and then they'll cut you really fast and say, oh, but how do you handle this? This is not how you should handle it, and nothing about crypto. Like, oh, I have this friend who works in this bank, and that's how they do risk management there. Why don't you do that? And I don't think that's the right way. And you're like, okay, I mean, if you think you can run the business, bro, like go ahead, like take my spot. I haven't been sleeping for 3 months. Um, I think it's a red flag when the VC is trying to like cuts you in the first conversations and start giving you instant feedback on why you're running the business the wrong way. All the really great VCs I've worked with, all the first meetings, like for a big while, they were just listening and like just taking notes, just taking notes. You don't know what's going on. They're taking notes. They're listening. You're just saying, like a psychologist, like a shrink. And only at the end they would say, "Oh, well, wouldn't it be interesting for you to try this?" And it's reverse psychology, and so that's a green flag. That's really good. In crypto, it's a space that evolves so fast. And even if you're speaking with like a Pantera or something, like still, I think these people are humble enough to understand that space is not just them, and that things are. I mean, I speak to young founders like every week. I'm like, I'm amazed at the stuff, and I like the stuff that's going on. I don't even understand it. I feel like I'm a boomer, like I'm a crypto boomer now. So yeah, definitely a red flag in crypto. I don't know if that answers
Okay.
the question. It was quite a long answer, but
It does answer the question. And I love how you're opening up to the audience because the Berkeley Accelerator ultimately just wants to provide value. And so my hope is always that co-founders of the companies come in here and kind of show their real personalities and share things that they otherwise might not in more polished settings. Um, but that being said, okay, so I've had situations where I've worked in the Genesis team of various companies, and there's too much interest. Oftentimes, the best projects are oversubscribed anyway. So, what would you say is the litmus test between do I accept money from this party or not? What money should you refuse?
I mean, if you want to raise money, and that's another kind of topic. I mean, there are some cases where it's a ethics dilemma, I guess. Like if you, like I won't name them, there are some investors that have ties with, questionable areas or the money definitely comes from questionable sources, it's up to you. So there's no answer there. It's pure ethics. Um, but I'd say that you want smart money and you want people that won't try and take over your company or think they can run it for you. And the only way you can know about or learn about that is by conducting reference checks. So if you have these different companies, take the time to vet them and to ask them to make a bunch of intros to different portfolio companies that are relevant to you or irrelevant as well, with maybe try to ask for founders with different ethnic backgrounds, because who knows how the partners treat different types of ethnicities. Like there's a bunch of stuff that you won't see when you're just speaking with them for like a few discovery calls. That's the only thing you can do, really. I mean, I don't see anything else that can be done.
Yeah, totally. All right, so we're coming up on the end of the podcast, so I have some rapid fire questions. Are you ready?
Go ahead.
Okay, let's do it. Favorite color?
Blue.
Favorite animal?
Cat.
A book you've recently read and why it's inspiring?
I recently reread Dune, and I love Dune because, I mean, in my opinion, the story is not about the story that's being said. It's a story about revolution, but also about how you change your mind, as a person, how you go through the journey of you know, growing into manhood, and how that changes your interactions with others. And I don't know, I felt the book more than am able to tell about what the story is. Anyways,
Okay, what about movie?
I loved the Dune by Denis Villeneuve. So yeah,
Okay, so
no.
Dune.
But no, so Dune, yeah. I mean, I read the book and I love the book, but the movie was also great. Yeah.
Okay, perfect. Well, you're a mega fan. What about TV show?
Um, I'm currently watching The Boys on Amazon Prime, and that show is really funny. I don't know if you're familiar with it. You
No,
know,
give us a quick pitch. An
so
elevator pitch of the boys.
what happens if superheroes are all working for one big corporation, and so they're the most valuable asset on the corporation's balance sheet? So that's just interesting to see how they're the biggest assholes on earth, by the way. So that's the pitch.
Okay, very much so. What would you say, as an entrepreneur, but also as a person, a man, is your defining characteristic?
I'm loyal. I'm very loyal.
Okay. What is it that you look for in people when you decide to join hands with them?
Mm, are they curious? Are they responsible? Are they driven? And they could be driven by anything. It doesn't have to be something specific to us or to me. And are they supportive?
Okay. All right. If we look at life through these lenses, romantic, personal, professional, then how would you rank them in order of importance to you?
So you said romantic, personal, professional. I'd
Yeah.
say, I mean, romantic and personal, same thing for me, to be honest. Like I don't dissociate. So both definitely above professional, like for sure. I'm French. Like of course they're above professional. What is the purpose of working if not to live? Yeah.
Okay. We need a little more of that in startup life. Yeah, we need a little more of that. Because that whole quote of like startups are like looking at a dark void while chewing glass. I wonder, is that true? I mean, I think startups are a fun journey you can do with your friends and contribute to the world.
And you can share and open up with the people around you rather than walling yourself in like a lot of founders do, and guilty of it, right? So definitely.
That's true. What would be your advice to someone who, you know, they are working very hard, but they're not quite at a stage where they've earned that level of respect, worthiness, and belonging that you have at this point? What would be something you would tell yourself maybe in a past version of you?
Everybody goes through a shit phase, like that's how I want to say it. Like you definitely, there's no shortcut unless you were born filthy rich, and even if that's the case, like, there's going to be a shit phase where you're going to have to earn that respect by actually being treated like a nobody. And so just knowing that, like I often say, it's going to happen to you, and just you're going to pull through it. I don't know if the company is going to succeed, but that respect part and like that's going to happen. So just knowing that it's not eternal helps.
For sure. No, it's not forever. Yeah, it's not an infinite series of
It's
painful
not infinite.
experiences.
Yeah, you get out of it for sure.
Okay, gotcha. Well, last question is, you and your team have already enjoyed quite a lot of progress, and I think you've done impressive things, but the industry is living a long life and you'll live a long life with it. So my question then is, how will you know that you're being truly successful? What does it look like for you to walk with your team up Everest and take a selfie together?
Well, how do you know when SheeldMarket has been successful? I guess when our offsite is us charting a private plane from Paris Charles de Gaulle to Las Vegas for a whole week to celebrate our accomplishments, and I guess then we'll know. All right, we're made people.
Okay, sure, I'll see you there. I will see
Yeah,
you there.
we'll see you there, Luke.
All right, man. Thank you so much for showing up.
My
I
pleasure. My
look forward
pleasure.
to seeing, yeah, look forward to seeing what you do in the future as well.
Thanks for that, Luke.